Hi, I'm Luke Langio, and this is Investor Place Quick Picks, where we communicate to you some of the market's best investment ideas in just 5 minutes. Today, we're going to be talking about another one of my favorite long-term growth stocks. The name Twilio, ticker TWLO. Now, Twilio Stock has come under some pressure over the past few weeks because the company reported third quarter numbers that, while above expectations, included a subpar fourth quarter profit guide. And it makes sense that the stock sold off because it was priced for perfection coming in. There were some imperfections in the report, so the stock is dropping. Makes total sense. But we have to put this in context. And that context is that, one, Twilio management has a reputation for under-guiding and over-delivering. It's what they do. This looks like a textbook move from Twilio. So the real numbers, the real Q4 numbers are gonna be much better than what the guide is saying they're gonna be. And two, Twilio stock, when all is said and done, is a long-term winner thanks to a shift to cloud communications. So basically, big picture, hey, the sell-off happened, okay, let it happen, buy the dip, hold, wait out the turbulence, and let long-term tailwinds take this stock way higher over the next 5 to 10 years. The long-term bull thesis on Twilio stock all boils down to one thing: the API economy. Now, APIs is short for application programming interfaces. And communication APIs are essentially just little blocks of code that allow different software services to communicate with one another. Now, that's really important because there are so many different types of software services out there in the world today, and they don't all speak the same language. APIs allow them to talk to one another, right? So for example, let's say I'm Uber. Uber sends you a text every time your ride has arrived. But all those people receiving those texts, they have different software on their phone. You have iPhones, you have Androids, you have Google Pixels, so on and so forth. Sometimes they send them to computers. Maybe it goes to Messenger. There's all these different endpoints for that one message. How does it get translated into all those places so that nothing is lost in translation? APIs enable that. Same with Postmates sending you a text when your food arrives. Same with Zoom. Zoom is one software. It has to work on computers, has to work on desktops, on laptops, on HPs, on Macs, on iPhones, on Androids. How does it do that? Communication APIs. So communication APIs really are the fundamental communication building blocks of the modern digital era. And because we are rapidly pivoting into a world where everything is software, where everything is online, where everything is virtualized, these communication APIs are becoming ubiquitously used across the enterprise and consumer landscapes. And guess who is at the center of the communication API megatrend, of this API economy? Yep. Twilio. When it comes to the communications API space, Twilio is the 400-pound gorilla, the juggernaut, the unbeatable beast. They are the leader, and nobody is really challenging them. So to that end, Twilio has guaranteed itself basically the head seat at the table of the API economy, meaning that as the API economy booms and booms and booms over the next 5 to 10 years, Twilio's revenue growth rates will remain enormous. Now, at the same time, Twilio's business model, it's a software business model, entirely software, is highly scalable. What that means is that Twilio, although today it only operates at around 0 to 2% operating margins, with scale, those operating margins will expand dramatically, probably something close to 20% or 30%. So when you add all that up, Twilio not only has enormous revenue growth potential over the next 5 to 10 years, but also tremendous margin expansion potential. Big revenue growth plus big margin expansion equals enormous profit growth. And as go profits, so go stocks. Twilio stock will not be an exception to that trend. In the long run, enormous profit growth will drive Twilio stock to enormous gains. Twilio's third quarter numbers broadly underscore that the company today is firing on all cylinders, and that long-term growth narrative remains healthily intact. Twilio added 8,000 paying customers in the quarter, so they're up 20% year over year. Dollar-based net retention rate was 137%, so those customers, the existing customers, are spending more and more and more. Great sign. Revenues up 52%, operating margins expanded by nearly 300 basis points. So pretty much everything is trending in the right direction. Now the stock just fell because management basically said, fourth quarter might not be as good as the third quarter. But guess what? As I said earlier, this management team, long history of under-promising, over-delivering. This is a classic case of that, okay? What they're saying right now, real numbers, gonna be much, much higher. And if they are much, much higher, then they're gonna be in line with the growth trajectory that we've been seeing for the past few quarters and years. And they well underscore that, yet again, the long-term growth narrative on Twilio stock remains strong. So long as that remains true, Twilio stock is a buy on any and all dips. It's a long-term winner. Anytime it starts to show weakness, let it drop, scoop it up, and let the tailwinds take it higher in the long term. Well, that's all we have for this edition of Investor Plays Quick Picks. I hope you like what you saw. If you did, please subscribe, hit the notification bell, smash the like button, or if you'd like to read, come over and visit us at investorplace.com, where we have some of the market's best analysis. Until next time, cheers and happy investing to all.